Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burton, and we're joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start with defence shares then in Europe. Lower after a Deutsche Bank downgrade. How are the likes of BAE Systems faring?
Yeah, exactly. So this is a note from Deutsche Bank targeting three main defence stocks. We've got BAE Systems, Thales and Leonardo. So this analyst has cut the ratings across the board from a buy to a hold. Now, this isn't necessarily saying that, the defence sector as a whole isn't faring as well. It's given kind of individual reasons for the different stocks. So for BAE, they say they're unlikely to beat their full year expectations, that they're noting what they call disappointing maritime margins. And they've also noted affordability concerns in the UK and the US markets. For Leonardo, for example, they say there's not much upside. The stock, they're saying, doesn't deserve a premium compared to other defence stocks just yet. And for Thales, they say there's an absence of imminent catalysts, so more uncertainties, particularly around the French defence budget. They say they're lagging in their cyber unit. So some individual reasons that they're pulling down these ratings for the different defence stocks. If you look at them on a more kind of a wider basis, if you look at the analyst ratings, most of them are still, they do still have a majority of buy ratings. But interestingly, there have been a couple of downgrades across the board over the past few months or so. So we'll be keeping an eye on those. But obviously, this is coming after defence has enjoyed a huge rally on the back of this rise in spending. So yeah, an interesting note there from Deutsche Bank.
And yet still perhaps surprising given the geopolitical tumult with which we've started 2026. I want to turn to a very different sector, and that is drinks, because Diageo, I'm going to say the script says, could be thirsty for an asset sale. Tell us more, Louise.
Yeah, so Diageo, obviously the drinks giant in the UK, reviewing options for their China assets, and potentially that could include a sale. So this is a Bloomberg exclusive this morning. They're working with Goldman and UBS. They're essentially kind of sounding out local buyers and private equity firms. And obviously no certainty a deal or any deal will come about, but this is what's being spoken about. One of their biggest assets over in China is a company called Sichuan Swellfang. They're listed already in Shanghai. They're known in particular for Baijiu, which is a Chinese liquor, and one of the kind of big drinks companies in China. They've got a current market valuation of about 2.7 billion. So a big company, if this resulted in a sale, potentially some big sums there for Diageo. And it kind of comes in the context of two main reasons. So, firstly, a lot of international brands are pulling out or reviewing their portfolios in China. There's a lot more domestic and growing domestic competition there. So, for example, Starbucks sold their majority stake in their business relatively recently. And then on Diageo's side, they've also globally been trimming down their portfolio. So, for example, they recently sold their East African brewery arm. That's as their, drinking habits are changing. They're also struggling to get consumers to buy more expensive drinks, so trading up. And so their strategy is to trim down and focus on their core. They've got a new CEO that started this month, and he's known for having in the past turned Tesco around. So he's kind of being tasked with turning Diageo around. So yeah, the latest news is that they're reviewing options for their China assets. So we'll be keeping an eye to see if and when this results in any sort of sale.
Okay, and news too from Raspberry Pi in the UK. Shares hitting a record low earlier. What's driving that?
Yeah, so shares slumping below their IPO price. So Raspberry Pi became known for listing in 2024 as, at the time, one of the few companies that was listing in London. So they're obviously the computer maker. So they had strong results, but this is being kind of overshadowed by, at the same time, a warning saying that the rapid increase in costs of a certain type of memory chip costs are increasing. This could potentially weigh on the company. More supplies obviously being funneled into other things as demand increases, like AI data centers. So they're saying they have enough to meet demand in the first half, but visibility in the second half is limited. So yeah, as I say, record low for them. Shares slumped around 10% this morning.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio Live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.